Today, folks, I know you know somebody that is going through extreme fear in the market right now, whether it's those high yielding covered call option ETF chasers, whether it's the speculations in small caps or the volatility in some of these AI stocks. Yes, those people are reassessing their portfolios, and we get to drink some tears today from the Blossom Yield Max chasers that are leaving in droves, which I called to a damn T. And we should also point out the VIX guys. Like, I'm not seeing volatility last long enough to get me excited to buy. Markets tanked miserably this morning before recovering, not really giving me an opportunity to buy the dip. And I'm a guy that dreams for more bearish days, unlike, a lot of people that just want to keep going up and to the right. I know I get rich when the markets go down, and a lot of that, risk tolerance and understanding market fluctuations, I have to give honor to Warren Buffett, the mogul, probably one of the greatest investors of all time, who's passing the torch to Greg Abel now at Berkshire Hathaway. The influence this guy had on me, the biggest regret I'll have is not going to a Berkshire Hathaway annual shareholder meeting. Rest in peace, your soul, Charlie Munger. Jack Bogle, the creator of the Vanguard market cap weighted ETF, responsible probably for making more millionaires and more financially independent people than any other investor alive. And they're all being put behind us, guys. We are now the next generation of investors, and this influencer clown doesn't want to be put up on that pedestal because these guys were utter legends. So let's hope we can, at least take the learnings and the education and move forward in doing intelligent things with our own portfolios. And we'll break it down this week, what's been going on with the markets. We'll drink some tears of people that have, at least publicly come out recognizing their stupidity. So if you're on a path to financial independence, if one day you'd like to retire early, join me on that journey. Hit that subscribe button, folks, because we did some pretty big moves this week. We sold out of XEQT in favor of VDY to just keep diversifying a little more aggressively away from purely the United States. And VDI, my monthly paying Canadian dividend ETF, continues to offer stability against the entire portfolio while providing a little bit of a bump of income. Because if we take a look, obviously the tech stocks getting hit the hardest for me. Meta down quite materially. Google starting to correct a bit here. VDY still green on the week, but VOO again went through a pretty aggressive drop into Friday before pretty much fully recovering the losses from the week. If we take a look, we had some pretty good earnings. This is what's kept the market alive and really goes to show that we're probably not in the biggest of bubbles. I think we're in a secular bubble, and those things are starting to experience that volatility. But I mean, we had earnings out of the mining companies out there, copper, precious metals, absolutely crushing. Gold's been a lot more volatile recently too, but still holding up over 4,000 an ounce. Silver still holding up over 50 an ounce. We're finally seeing a bump in oil, and I told you guys the best thing about Canadian energy right now, especially with Canadian natural resources, is if oil even goes up slightly, this company's production has expanded so dramatically, it has kept it from going down with the oil prices. And if oil just bumps up a little bit, the earnings are going to explode for this company, and I'm so thankful it's one of the largest market cap weighted companies that sits within VDY. I think it's like in the top 5 stocks. It's one that I would definitely like to hold individually, but thankful that I get it kind of concentrated through VDY. I do love these kind of companies and the fact that they offer a lot less volatility. On the US side of the border, we kind of finished up earnings. I mean, in Canada, we still have bank earnings, so you can see everything else is green, right? Like, we had great earnings across the board. We just got to finish up with bank earnings, and something tells me those are going to be exceptional as well. So I'm glad to be upper weighted in VDY there. But in the US side of the markets, we've gotten through earnings now, and I really don't think the earnings were great regardless. Like, you couldn't say we had a bad tech earnings for the most part. So when we get these major dips, they really open up some awesome buying opportunities. If you stick to a lot of the mega caps, you're obviously going to have to be a little bit more cautious when you're looking at the lower half of the market here. Everything's going green, right? VOO looks like it's now green. I should have refreshed my chart. With the exception if you scroll down, though, I mean, if you take a look here, guys, a lot of the crypto is still getting hammered. That's not really recovering right now. And you're seeing it in the small cap realm of things, too. They've corrected quite a bit, and they're not bumping up with the market. And I think that's just people locking in gains into the end of the year. They're rotating it back into the more safer foundational companies, the S&P, the Qs probably. But crypto specifically, guys, I've been finding just utterly entertaining because when you look at the option ETFers out there, again, I'm going to be doing some debates over covered calls soon. because I just don't think people understand what they are and how they work. And there was a lot of people that got caught up in the yield max cults. And I told you guys, anything to do with yield max is going to lead you to a massive detriment of lower returns. It's just stupid investments. And a lot of the misty investors out there, the micro strategy, crypto, high yielder investors, they're done. They've moved on. Same with the alti investors. And I love seeing this, like Jared LaMarche. And again, I've made mistakes in my life, and I like people who can publicly own up to them, and I have a great deal of respect for people like Jared here, but huge changes. So yesterday I sold my largest my covered call position, Alti. Super hyped to finally exit this position, as it did me well while I was in it. As you can see, we broke even, all while reinvesting these distributions into pure growth. This was a fun experiment, but I'm glad I got out here. I'm glad I got out. Here's what I bought yesterday, and he's just basically buying like VFV and some more foundational stocks. A lot of comments were funny too, because they were like mean, like I am. Imagine if you never bought into it and instead bought VFV when it was cheaper. Always good to learn. And this guy says, I know, right? Haha, we live and learn. Lol, smart decision and great buys. Looking to sell my Misty once MSTR gets into the S&P 500 as well. Keep grinding, Brody. I wouldn't even touch Misty with a 10-foot pole. Jumped into the CC ETF hypes right after joining this social app. Blossom has done such a great detriment. The cult of just covered call investors are incredible. I bought a bunch without really knowing what I was doing, managed to sell most of some gains, but held on to Misty, which kept sliding down. Luckily, LLHE.to popped off and covered the losses. Just sold everything with an overall profit. Learned my lesson through CC ETFs are wild. Glad I got out ahead. There's no free lunch in investing, though someone always tries to sell you the free lunch. So again, guys, covered calls, you do not buy them on highly volatile investments. They cap your upside. You get the entire downside. You won't experience the same recovery. Everything about them when you're buying, again, I have nothing against covered call ETFs if they're done appropriately for somebody that wants stabilized cash flow in retirement. These do not offer stabilized cash flow in retirement. They're highly volatile. They're highly risky investments. They will destroy your returns and not give you the same upside potential, which is the whole reason to own and buy Bitcoin or the monster ETF, right? And just look at how bad, like Alti as an example. The last dividend, by the way, contained 0% dividends. It was just purely a return of capital. So they're telling you that they're giving you the 70% distribution. Meanwhile, they're just giving you your own money back. How much do you think they're charging you to give you your own money back? Where's the fees on here? 1.4% to return your own capital while giving you less returns than the broader S&P so far since inception. The annualized rate of returns are garbage to be paying a 1.4% fee. Just smart now. Gonna slap some of you upside the head. You deserve it. Otherwise, I did want to point out Tesla here as well. And a lot of people have been saying I haven't talked about Tesla all that frequently, especially with the nuances of self-driving and robotics. And I just want to tell you, I have a great deal of disappointment for Tesla. If it went back down to the $100 where it deserves to be, I would be all over this because I still like it with what they're doing into the future. But the reality is, they suck at a lot of their goals. And I know people are going to take that close to the heart, because if you compare it to, say, something like a pure EV play like BYD, let me remind you, Tesla started the electric vehicle revolution, right? And then they started expanding into battery storage and self-driving and robotics and like 20 other things. Even in that umbrella of all the things that Tesla's trying to achieve, BYD is doing far more revenue, far more profitability at a far cheaper valuation than Tesla is. And they are a pure EV company that completely stole the sector from Tesla. And, Elon will never say it. No one's talking about it, but they're failing at transforming the entire EV revolution and proving why EVs are better and superior, because they can't do it cheaper or better than BYD. They keep pushing the buck down. They've flopped on the Cybertruck. There is no Roadster after 8 years of promises. And people somehow are excited thinking that they're going to be able to achieve some great success in robotics, yet we're already several years delayed on self-driving, and Google is still the leader in self-driving right now. And I don't get me wrong, I think Tesla needs self-driving to work sooner rather than later to even come close to justifying this value that has already priced in self-driving. I don't see a point in owning Tesla today. There's no point buying the hype. Because their products just don't exist. We live in a world right now where people overpromise and underdeliver. Like I said, I wish we could go back to the Apple days when it was like, let's make the product, let's make it incredible, let's make it buyable, and then release it and have people be able to order it within a month. That's not the world we live in. We live in overhype, overpromise, raise capital in the market, get rich without product. That is Tesla's business model right now, and I'm shocked that people are willing to support it, that is just a fact. You cannot argue that as a fact. So if you're buying this, you're buying it at an extreme valuation today on a lot that needs to go right when they haven't been able to prove they can do it right in the past. So why make the risk? I'm more, again, inclined, guys, to keep my money with Meta and Google. Easiest AI plays in the market. You get all kind of the same exposure that you're getting with Tesla from the growth side of it. Again, I keep kind of reiterating that mantra. I wish there was easier stocks to buy out there, but with the delay of GTA 6, again, the higher valuations and some of the speculations, when it comes to AI, I can't see anything else out there that gets me all that excited. So I'm very thankful to have come to this consolidation in my portfolio today, where VDY gives me great exposure to more stable stocks in the Canadian market while increasing my yield, outpacing the US in the last 5 years, which is kind of mind-boggling to consider. But getting that exposure to Meta and Google, my two favorite AI plays, my two favorite stocks in the whole world right now, while also just market cap weighting my way through VOO. Again, this is something that I think has been really healthy for me in a long time coming, since the inception of this channel back in 2019, and it's gonna be neat to see how we evolve in time, especially if we can get some more major dips out there, because I am sitting on a substantial amount of cash. As many of you know, my chat groups, I'm sitting on a decent 5 figures right now, and I'm just not that comfortable unloading it. If we get a bigger correction, I am ready and willing and waiting. But on that note, if you want a more in-depth conversation, you can book a one-on-one, join my chat groups, kylelivingston.com, link in the description below. But I'll pass the question off to you. I'd love to know what you think in that comment section below.